It's been a little over a month since the 5% deposit scheme has come into play. It's had massive ramifications. I want to look through stock listings, what's actually happening in the market compared to the last 5 years, which has already been an absurd time, and what we could actually be doing when we're looking at the numbers that are coming out for the past month from RP data. If you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, the latest numbers have come out for October and they're not looking pretty. Now, if you're a home owner, these numbers might be actually really good for you, but if you're thinking about investing or upsizing or downsizing, these numbers aren't great. And I don't think it's going to get any better, but we need to dive a little deeper, especially with the latest inflation data coming out and causing a bit of a surprise when in reality, the biggest mover in the inflation numbers was energy. It just so happens to coincide with the government actually going and subsidizing, and they had just ended the subsidy. So obviously it should have been expected that the inflation number should be higher. Now, in saying that, it has put a lot of people offside when it comes to interest rate cuts, and there's potentially no more coming for the next couple of months. Obviously, when you have inflation numbers coming out like that, it's not great reading. What's really interesting is for homeowners, you're like, okay, I don't like the fact that inflation is really high because it means that now interest rates aren't going to come down, and that means holding costs are going to remain higher. But on the flip side, you've also got to think about how with inflation, your property is actually increasing in value and the debt that you have is in today's dollars, which means as inflation is in the system, your debt is actually losing value. While it can seem on surface level very grim reading when inflation is so high, I would tell you to think deeper because that's where the majority of people will stop. You'll look underneath and you'll realize that it can actually be a really big positive for you personally when it comes to building wealth. Now let's dive into some numbers and then I'll conclude all my thoughts at the end. So Cotality, which was formerly known as RP Data, released these monthly housing chart packs and they come out every month. A lot of people make content about it. A lot of people are aware of it, but I wanted to focus especially this month given how we've just seen the 5% deposit scheme come into play. And although this may not capture 100% of that information, I think it's going to give us a bit of an idea. And then I also want to go through a property sentiment report, which always comes out as well. And in that, we're going to be able to see what are the expectations and where are we at in terms of the cycle. Are people just really euphoric and think property can never go down, or has that changed over time? So let's go through it. Now, first up, we'll take a 12-month change view here. We've got Australia growing at 4.8% nationally. We've got combined capitals at 4.3% and combined regionals at 6.6%. You can obviously see the breakdown here with the regional areas being regional Western Australia being the best performer, followed by SA and Queensland. And then in the capital cities, Darwin is number one. And then you've got Brisbane, followed by Perth. I don't think there's any surprises here, especially if you've been watching my content. I did say Darwin's probably going to be the biggest performer in the next sort of 6 to 12 months, but I don't think it is sustainable at all. And so that's why we don't actually invest there. And I've got no properties there and I have no intentions to buy there, despite it being probably the best performer. A lot of people are starting to speculate in the Victorian market. We can see regional Victoria at only 3.2%. And then we can actually see Melbourne as the lowest performer of the capitals at 1.9%. But if we take a closer look at the market, we can look at the 3-month changes. And what we can see is nationally, we've seen prices increase by 2.2%, combined capitals at 2.3%, and combined regionals at 1.8%. What we can see is in these 3 months, we have regional Western Australia leading the pack there. And then when it comes to capitals, we again have Darwin leading the pack. But when it comes to Melbourne, it's still a really low performer at 1%. So we really haven't seen that big move. Regional Vic is at 1% as well. So even just in this period of time, we haven't really seen a massive move, which you could interpret as a massive opportunity. And for others may think that actually you're just getting into a market that you're hoping is going to go up at this point. But a lot of the data suggests that yes, it is undervalued, but you've got to go and factor in that Victorian government is very, very different. And I say that with tongue in cheek. Now, what I want to bring to your attention and why it's so important to look at this is the listing numbers. So total stock levels have moved subtly higher in the past 4 weeks with just 122,173 properties observed for sale nationally over the 4 weeks to October 5th. Since the start of spring, total listing levels have risen 2.7%. However, stock levels generally remain tight, sitting at minus 19.3%, below the historic 5-year average for this time of the year. And this is wild. So let's have a look and we're going to break it all down. Now, what this is suggesting is compared to this time last year, we are down almost 15% in terms of listings. And if you compare it to the last 5-year average, we're down 19.3%. What this doesn't tell you is what the market was looking like previous to the 5 years. And to give you an idea, there were more properties listed for sale and to rent 10 years ago than they are today. And that should absolutely blow your mind because these numbers aren't normal. The reason I say that it's important to know not just this year compared to the last 5-year average is because over the last 5 years, I've been running the buyer's agency Search Property. So I've known all the challenges that have come with lockdowns, with interest rates going up, interest rates going down, home builder schemes, JobKeeper, JobSeeker. And I remember listings were so much higher pre-2020 when I was investing for myself. And every year since then, we saw numbers continue to get lower and lower and lower, which is why it's so important that when you've got a buyer's agency, you've got to be sourcing off-market deals. Otherwise, you're competing in a market where supply is so small and the amount of people wanting to buy these properties, like the everyday mum and dads, the average investors are going to get absolutely wrecked because you can see that there's 20% less stock compared to the last 5 years, but there's less properties available for sale and to rent than 10 years ago. That should tell you a lot. And that's not to say that the deals online aren't good. It just means that you're going to be met with a lot more competition. And at some point, agents aren't even returning your calls. So we can see a real big issue here. And what we really wanted to see in September and October was the numbers start to increase a lot. And we did see increases of about 2.7%, but that is nowhere near where it needs to be. And this here tells you exactly which areas have been affected by the total listings. What you can see on the left is new listings and on the right is total listings. And you can see those numbers aren't pretty reading for anywhere. What you can see is that the increase in regional Northern Territory is about 64% in terms of new listings. So obviously there's been a lot of artificial movement in that market, a lot of people going out there, a lot of other buyers agents wanting to buy property, and it's starting to pump up that market, which is very artificial. It's the stuff that you want to avoid. But naturally, if they're seeing those prices, people are going, oh my God, I can cash in and I'm going to sell my property. And I would say that if we're going to see a correction in this market, we're going to see it most likely happen in that Darwin market. So good luck to everyone that's buying there. And you're seeing that with not just new listings, but you're also seeing it with total listings. And you can see all of that stock just being eaten up as well in the background, with total listings down almost 45% in Darwin. So a lot of those properties that were just sitting there, agents had listed it, no one really wanted to buy it, say 12 months ago, now we're coming in and just clearing up, and that to me screams FOMO. And speaking of FOMO, that's a big reason as to why I wanted to make this video, because while it can feel like there's a lot of FOMO activity, people going out there buying property left, right, and center, it just doesn't feel sustainable. You got to take a look deeper into the data and then take a step back and look at sentiment. So we've looked at some data points in this video, but what I want to look at is sentiment. So the Australian Property Investor magazine actually comes out with a property sentiment report every quarter, and I read these every quarter, and sometimes I make videos about them, sometimes I don't. Now, let's look at the sentiment report for Q3 of 2025. Now, we're looking at who's actually going and contributing to this survey. 37% are owner-occupiers, 7% first-time investors, 40% are seasoned investors, 1% first home buyers, 7% rent investors, and then 5% are renters and 3% are other. We've got a fairly even breakdown in terms of gender as well. And then age group, as you would expect, 35 to 44 is the most popular age for people to get into property as well. So that's what's making the majority up here. Now there's a bit of an executive summary here, which is Victoria nipping at Queensland heels as preferred investment target. So this is a very interesting point I wanted to make for you guys, especially if you're going out there trying to educate yourself about property and looking at the right areas. You're going to see sentiment move first, then you'll see the lag data actually pick up. So you'll see that a lot of people will feel confident about something and then they'll make that move. What you should do is go back and look at sentiment reports from a year ago or 2 years ago, and that should start painting a picture of where things will be moving and how things have transpired. So in this, we can see the state with the best property prospects for the next 12 months. We've got 15% thinking it's Western Australia, 4% in Northern Territory, 5% in South Australia, 30% in Queensland, so still the number one spot, Tasmania at 2%, ACT at 2%, 17% for New South Wales, and then 25% in Victoria. Now, obviously I've been reading these for a while, and from a year ago, you would see this number at less than 10%, which is absolutely wild as to how it's changing. And what we can see is in which states did you purchase property in the last 3 months? And what you can see is a massive number there for Victoria at 25%. So it's clear that a lot of people are wanting to get into that market. And then when you look at where did you sell your property in the last 3 months, you can see it's fairly even across the board, but a lot of sales in New South Wales. So one could conclude that people in New South Wales are selling off their properties because the investing side of things don't actually work out in terms of numbers, and they're going across thinking that Victoria might be a better play and speculating on that market as well. Now, what factors have contributed to selling property? Number one is profit taking. Next is reducing total debt, and then diversifying financial portfolio. And then what do you intend to do in the next 12 months? So 30% of people are expecting to go out and buy a property. You've got people who want to renovate and subdivide, and then you've also got 14% wanting to sell. So I find that very interesting, that there's a lot of positive sentiment in this market, and this has been trending up in line with consumer confidence as well. Now, investors are still favoring houses over units, but you've got a lot of investors looking for affordability. So they're looking at villas, they're looking at townhouses, and they're looking at units. And naturally, a lot of people are wanting to purchase as an investor rather than an owner, occupier, or developer. And then the type of properties, again, 20% are detached homes. You've got 20% at units and apartments, and then you've got 19% as townhouses and villas. Personally, I think there's a huge amount of value, and I've been saying this for the better part of 5 years. I've been saying townhouses and villas are going to be a really good opportunity for a lot of people. I'm not saying that from the perspective of they're going to perform the best and they're going to give you the best numbers. They could well do that. It depends on the location you're actually buying in. But I think from an affordability play, I think that's going to be the most popular asset type, especially in the housing market. I think a lot of people will go towards the units because they have to. And then with detached homes, I think they're getting out of reach for most people. And by the time 2030 comes around, I don't think many people, if any, will be able to purchase homes in general. So it's pretty grim, but for those who can actually go out, take advice from these videos, go and action that, I think it could be okay for you guys. Now, the last part of this report that I wanted to cover off was consumer confidence and how confident people are at this point, and that's going to give us an indication of where we're at in this cycle. So property prices have just recorded their fastest quarterly growth performance in almost 4 years. And our respondents do not envisage this stopping anytime soon. A record 88% think property prices are going to keep rising. It was the third successive quarter this metric rose. Sentiment around further capital growth, specifically in regional areas, is still strong at 65%, but that has declined from a record 73% who felt that way in Q2 of 2025. What this effectively means is that we're seeing increasing confidence in the market that prices will go higher. And I guess at this point, it doesn't take a genius to think that, because supply is low, there's no incoming supply. You've got interest rates a lot lower than where they were at the peak of it. Inflation is around, but it's not as big of a concern as it was a couple of years ago. And then you look at affordability, and people are getting in because they think they can't get in, especially if we see a market increase by another 10, 15, 20% in some areas, which I truly believe is going to happen in the next 12 months. They feel like they may not ever get an opportunity to get into the market. What I found was interesting is that regional areas have dropped in terms of how much confidence is in those markets to now 65% from 73%. So you're seeing a small downturn and correction there. And what direction do you see Australian property prices heading higher? 88% is increase. 10% believe it's the same, and only 2% believe it's going to decrease. So yes, if you're looking at FOMO, you're probably looking at this and saying, oh, well, okay, well, we're clearly near the top. If you looked at this as a fear and greed indicator, 88% is close to the greedy side of things. But then you really have to look at exact markets, get really into the micro, because there will be some areas, and I know it in Sydney as well. I've been active in those markets when it comes to like looking at property and how it transacts. And a lot of properties, if they're not priced well, they're just not selling at auction, and they're just staying on the market for a long time. So when we do see a frothy market, you'll see everything fly off the shelves. And so that's going to include properties in Sydney as well. And I know people are going to sort of think about affordability as the concern there. I'm still looking at that market where it's like $1 million to 1.5 million, and properties aren't just automatically selling. So unless we see that happen, and you're usually going to see it in the bigger markets first, then you'll see it trickle down into the affordable markets. And we can see that is 65% in terms of where you think prices will head for regional properties. And that tells you as well that you've got to see the big capital cities move first, and then you got the regional stuff in the background moving after that. So while it is still early to see the full ramifications of the 5% government scheme that's come into the system, to see how this is actually going to affect the markets, we are starting to see a lot more trends higher in terms of data points, in terms of days on market, in terms of vacancy rates when it comes to the rental market. We're seeing everything heading up towards the right. And that might not be something you want to hear if you're not in the market, but I still think there is an opportunity over the next 12 months to be able to secure yourself good real estate in good locations, but do it in line with your strategy. Don't do it because someone on YouTube told you to do it. You should be going out there, getting the right strategy, get the right people around you, because I've seen people lose a lot in terms of property because they've sold at the wrong time. They've gotten into the hype of selling because they think the market's going to go down or that there's a crash coming. I think you'll look at the fundamentals and then get involved in the market. And the other thing you want to consider is how exactly are you going to execute? Are you going in there with a strategy and then just spray and pray and just hope you get a property? Because believe me, you're still in a market where markets can still go and correct, although I don't think we're anywhere near the top in this market. I'm keen to hear your thoughts. I know that there's going to be a divided camp here. Some will go, well, there's no supply, so how can you tell me that markets are going to go down? And on the flip side, you're going to see people say, no, the 18.6 year cycle is correct. You've got all these indicators suggesting that yes, If you want to cherry pick indicators suggesting that we're at FOMO levels, you would say that the market's going to collapse. To me, being historically correct is one thing. Another thing is securing my financial future and actually making decisions based on numbers and not what someone's opinion is. So I hope you guys have enjoyed this video. If you have, smash that subscribe button and I'll catch you guys on the next one. Thanks guys.